Let's see. Is this all working? Is my mic working? Looks like things are up and working. Hello? We have humans here. People are alive. Everything is working out. Welcome to Aaron Parecki's viewers that came over from his stream. Please let me know. Make sure that, I'm running the stream now by myself, and it's been like almost 2 months I've been running the stream by myself. But there's always a chance that I forgot to turn my mic on or something. So please let me know that you can like see and hear me and I sound okay. I will say, despite the window being closed out there, I swear the noisiest cars known to man are driving down the street right now. So, yeah. Latitude says, this rainbow whatever pinafore is very good. It's actually a full jumpsuit. I got it secondhand from Poshmark. It is secondhand from Poshmark, and it is I think a ModCloth and Collective collab. It's Pride weekend here in Portland. It's, Pride month all month. There seems to be a lot going on today because today is Father's Day. It is Juneteenth, and it is Pride Parade here in Portland. It seems like maybe there's too many things to celebrate today because I don't know about you. I'm not feeling like the world is full of celebration right now. Maybe that's just me. But yeah, I'll see that. Nils says, we'll see if Aaron really fixed the companion buttons. They worked. The buttons that were having the issues were my pre-show buttons. So as long as sound was coming out prior to the show, in the pre-show, which I don't know if people that came over from Aaron's stream actually saw, but then we're good. Yeah, so I guess today's theme is about, despite it being lots of celebrations today, I don't know, this week has been a bummer. I think I've just got some of the summertime sadness going on. I haven't been deep depressed. I've just been I'm sure the markets and the war in Ukraine and all of the terrible things are probably not helping with my mental health, but also Portland decided to be January and it's just been pouring rain, so it doesn't have the normal it's summer, well, let's go for bike rides kind of feel out of it. Actually, people in Portland are not known for canceling bike rides for rain, but the rain has actually been so heavy here that a lot of bike rides for Pedalpalooza have been getting canceled. I think most ironically, yesterday, the Splish Splash ride, which is a ride where you go around and splash in fountains, was canceled due to the rain. Because the rain was just too heavy to have a family ride where you go ride around and get wet because it wasn't really warm enough outside. I will say I'm still as much as it might not be the best for my mental health, the weather, I think it's mostly just because I was excited to finally go out and see people and do things outside, and not because the weather is particularly bad, because I actually I don't love 9 months of rain, but I've lived in Oregon for 17 years now, and I'm pretty on board generally with you stay inside in the winter and you get your work done and you just look at the rain outside, and then you're just we're cozy. That's why we read a lot in Portland. But it's going on a little too long, but it's much better than the 114 Fahrenheit weather that we had last year, because most people don't have air conditioning. And even if you did have air conditioning, if you don't know, if you're on Celsius, that's 45 and a half Celsius. So it was so hot in Portland, and we are not we're not even prepared for 35 degree weather or 90 degree weather here. So it was really miserable. People died in their houses because it was so hot last summer. So, I would rather not having wildfires, being able to breathe, not having it be 114 degrees. But I will say, just like the constant rain, it's not an optimistic kind of weather. Yeah. Cheryl says, and the weather. Yep. New Bold One says, also feeling a bit low here. I think in the UK, hasn't it been really hot? Or is that just like the south of France? Because I literally every morning I turn on the BBC and they're like, people in France are freaking out about how terrible the weather is there. Kenneth says, tee hee hee, Bitcoin though. Oh, yes. So, not to have too much Schadenfreude, but like, there is, okay, so the regular markets, I say the regular markets, there's a lot of markets out there. Markets ain't doing hot, all of them. There's no one that's really, there's no markets that are doing well necessarily. The bond markets are sketchy, yields are going down because in times of high inflation, bond yields go down because they pay the same amount. Bonds are fixed. And so if they pay the same amount and inflation is going up, then their actual yield goes down. So bond markets aren't doing good. Equity markets aren't doing good. Pretty much all around the world. We're seeing some of the top markets just having kind of really huge corrections. A lot of people that have for the past couple years been bragging about their net worth increases online are now crying because maybe they were a little overly leveraged or they're just spending too much time looking at it. Like occasionally when I log into my my investment accounts, I feel like, I don't like the look of that. Yeah, my net worth has gone down like 15K or something since 12K maybe since the beginning of the year. Don't love that. However, I'm invested for the long term. I'm not hoping to pull money out anytime soon. And I just keep trying to remind myself that I'm buying while it's on sale, dollar cost averaging. But there are a lot of people that are having a rough time right now because of the equity markets. But the most like tangible and important thing, which we talked about last week, is inflation is everywhere. It's a global phenomenon right now. Each country has its own reasons why they're experiencing inflation. Generally, it has to do with expansionary fiscal policy that people had to do in order to, fight COVID. The slowdown and shutdown of economies that happened in order to slow the spread of COVID. And turns out when you slow an economy, there is sort of a delayed reaction. And that reaction, when you try to bring it back online and when you try to prop it up with printing money, is that you'll have inflationary pressure. And then supply chains have continued to be screwed up. China only got Shanghai out of their lockdown, their 2-month-long, extremely strict lockdown, like 20 days ago. We've been having a lot of port issues. The war in Ukraine is affecting fuel prices. Fuel prices affect downline a ton of things, housing prices, food prices, pretty much anything that you have to get around is, and it's also a big input for farming as well, right? Both in the equipment used, the transport of the food, and the fact that there tends to be fuel components to some of the things like, cattle. Cattle are very heavy. I don't know if you knew that, and to move them around. And guess what cattle eat? Not just cattle. Guess what livestock that humans eat? Well, they tend to eat a lot of grain. Where is a lot of grain exported from? Russia and Ukraine, which are currently in a war thanks to Russia's aggression. So there's just been a lot of rough things going on in the world. I think I'm probably, the thing that's probably like weighing on me the most is that I'm working on a book proposal with a co-author right now. Can't talk too much about it, but the premise is that it is a healthcare self-defense guide. And so we're working on our sample chapters right now for the book proposal. And like, I didn't realize how much just thinking about American healthcare and doing research and gathering all these numbers for hours each day would have like a baseline effect on my mental health. Because as much as I know all of this stuff, having to actually compile it all in a comprehensive thing in a way where you're trying to prepare people to fight against it makes you realize just how broken it is. And I know it's broken. I've lived under it almost my entire life. And it's really broken. I'm also still dealing with I'm now 2 months into fighting with freaking CVS specialty pharmacy and almost 6 months into fighting with my insurance company about my drug prices. And I had I started Friday morning with yet another hour-long three-way call between CVS Specialty Pharmacy and the patient copay assistance for my drug. And they, like, CVS decided that they couldn't bill more than $300 at a time. So they were just charging $300 every other day to my pharmaceutical card. And eventually the company that makes that card, the pharmaceutical assistance, just like shut off the card because CVS was like constantly billing it. It's been quite the journey. SK says Europe also has heat issues. Yes, here in Berlin right now it is getting better. Even rain tomorrow, which will hopefully help the wildfires. I didn't actually realize there were wildfires going on in Europe right now. I mean, I know you don't actually have like that many forests. Maybe this is just spoken as a Pacific Northwesterner, but like you don't have as many. Your trees are small comparatively. I didn't actually realize there were wildfires going on right now. I don't know how I missed that in the news. That's good. I hope that the rain comes. I hope the rain doesn't lead to mass erosion in the places with wildfire. That's always a risk. Nils says, finally got motivated to get back on the bike. Did a ride in 110-degree heat. Plants and trees already look super dry. Oh my gosh, that sounds terrible. I did, when we had the 114-degree Fahrenheit weather last year, so 45 Celsius, I thought my brilliant plan, because we have like a portable air conditioner in our apartment, which we bought when the summer started getting hot in Portland. However, it did not cool the office. It also wasn't very effective at all at cooling the house once it was up to 114. Because like the point of air conditioning is to like lower your house by maybe like 20 degrees. If you lower 114-degree weather by 20 degrees, then it still is incredibly hot. So it was still really hot. And I was like, how am I going to get any work done? Like my computer was like overheating. So I went back into the office, which was almost like a year ago today, for the first time since the beginning of like COVID, because I was like, okay, I'll go into the office because the office is in like a big office building. It has air conditioning. Hopefully it will like keep me cooler. So I got up like super early to be able to bike there, like as the sun was coming up, like 5:30 in the morning or something, so that I could avoid the hottest part of the day. And like my whole strategy was like, okay, I'm going to go in, I'm going to work there. It turns out the AC like wasn't working in our office. And then I was stuck 5 miles from my house. And the Max line, which is our light rail, which was my plan to get home, shut down because the tracks overheated and they couldn't run the trains anymore. And the bus shelters, like the problem was like, I was like, okay, I could take the bus home if I wanted to, but even just standing, waiting for the bus, like outside, was going to be so hot. And I'd still have to like lift up my steel bike and put it on the bus. So I ended up riding home being like, I think that riding home is better than waiting outside for the bus for 10 minutes, just sitting in one spot. It was the hardest 5-mile ride of my life. I do not know how people who live in like Arizona do it. I know people who bike like in Arizona in the hottest part of the year when it can like get up to like 120. I don't know how you do it. It was abandoned on the streets of Portland. Halfway through the ride, I was like, should I try to go to the mall to get into the AC? It was just so hot. The New World One says, a friend of mine is cycling from the UK to Prague, currently in Switzerland. Very experienced cycle tour. Used to live in Spain. Said it's overwhelming right now. Oh my gosh. That is really scary. SK says, not as terrible as wildfires get in other parts of the world, but some places around Berlin are getting evacuated right now. Do you know what places around? I used to live in Berlin, so I'm curious from geography-wise. Yeah, I used to live like very much at the edge of Berlin. So I am very curious where is getting evacuated. I hope everybody's safe. It's always really scary. Like we went through big evacuations in Portland because of the really bad wildfires in Oregon like 2 summers ago, where like pretty much everybody on a certain part of the Portland metro area was getting evacuated. And we were like constantly watching to see, because we were on like level 2 threat if we were going to have to evacuate. So, yeah. Phew. New World One says, not as hot as Europe. Well, they're struggling badly. Well, you know, that's the advantage of being in the UK, the foggy, gross island that it is. I mean, it's nice, depressing weather, which sucks in the winter, but can be preferable. But you're similar to Oregon, where you're just not prepared. I love how that we're just Belitz and Tryenbritzen, southwest of Berlin. Oh my gosh, that's actually really close to where I used to live. I lived in Lichterfelde, so I was like down there, but kind of on the other side. So yeah, wow, scary stuff. There are more trees there than there is in like central Berlin. I guess we're just talking about weather, y'all. That's apparently what we're talking about. I want to talk about what's going on in the crypto markets. Because I do, as everybody knows, I try to avoid talking about crypto too much on here because the trolls come out. And I don't like to deal with them. Hopefully we have enough. We have like subscriber only mode on in the chat. You have to be a subscriber for like 5 minutes or something like that in order to chat. So hopefully anything I say, it won't like, I don't know, trigger the YouTube algorithms or whatever. So let's be careful here. But there has been, so yes, all of the markets are doing poorly. So we can't necessarily say, okay, well, this one financial derivative is doing poorly. Therefore, let's talk about it as though it's happening at the exclusion of other markets. Like, we have to recognize that like we're seeing corrections in all financial instruments right now. And that is because there's a lot of bad things going on that are affecting very real things like inflation, like what we pay for gas, what we pay for groceries, what we pay for housing. All of these things are going up. I'm just surprised at like the things that I buy really rarely that I'm like, oh my God, the price of this has gone up so much. Like a movie theater ticket, we always complain about how expensive those are, but like they've jumped like 50% because they, were closed for so long. So the plane tickets too, because guess what? Fuel is one of the major inputs of plane tickets. And the airline industry is not doing well. It's got labor shortages abound. Things are not happening well for the airplane industries generally. So I'm getting off track here. My whole point is everyone is suffering right now. So why beat up on crypto? Well, there's a bunch of reasons why beating up on crypto I think is important. And that is because one, this is really crypto's first test. It wasn't seen as, it's still barely seen as a mainstream financial instrument, financial derivative, I would say, because it really does it doesn't have inherent value. It derives its value from its relation to other financial instruments. So we talked previously on a different live stream about the collapse of Tara USD, which was a stable coin. Essentially, they, have been trying to resuscitate Tara several times in order to like get it back, but Tara collapsing, it wasn't the number one most used stable coin, but it was one of the more used stable coins. And it collapsing did mean that some of the other stable coins suffered some slight corrections too, because people started to wonder, oh my gosh, are other stable coins going to work? As I talked about on that stream, stable coins have different ways in which they try to ensure their exchange rate vis-a-vis the fiat currencies they're using. So that would be USD, Euro. Usually those are the two currencies that they'll trade against. And one of them is algorithmic ways that they'll maintain that. The thing about algorithmic stablecoins, as we discovered with the collapse of Terra USD, is that essentially there are a lot of algorithmic traders on the market as well that when things would drop would immediately, when there would be a change in the value of the USD versus the crypto, they would switch back and forth between the tokens and USD in order to milk essentially the differences, right? I'm not going to get too deep into that because I have a whole live stream where I kind of talked about how that stuff works. Although if you have a question that I can answer, hopefully I can answer it. I'm no expert on crypto, but I do know more than your average bear. The thing to understand about why Terra USD collapsing affected the crypto market is it was in fact a linchpin in a lot of the ways in which crypto, including Bitcoin, the largest of all of the cryptocurrencies, was traded. Crypto really started to only gain mainstream traction with regular financial depository institutions. 2020, 2019 was when we started to see larger financial investment firms, hedge funds, kind of mainstream finance actors start to make it possible to interact with cryptocurrency vis-a-vis their institutions. And this is the first real test that we've seen. We have been living in unprecedented, as much as we all hate that word, market and world conditions for the past 2 years. And crypto was an asset that people were fleeing to because we were seeing large amounts of discretionary income because nobody was buying anything. But they, people that still maintained their income as the world shut down were like, oh, we're not spending on services. We're not spending on going out. Oh, I have more money in my pocket. The government maybe gave me some extra support in, the child tax credit or stimulus payments or, the unemployment payments that a lot of countries did, the increases to various payments from governments that they did to prop up the economy during COVID from the huge shock. People had more money to play with, and it looked like markets were recovering relatively quickly. So it started to make things like Bitcoin, like cryptocurrencies, look attractive to people that were maybe not sophisticated enough investors to understand them. That, coupled with the fact that we started to see more mainstream financial investors invest in it, meant that there was this perception that things were maybe a little safer than they were. And then we had huge pivotal moments with the fact that people started to get A-list celebrities involved with the promotion of cryptocurrency. And we will see that a lot of those celebrities, A-list or not, were in fact essentially involved in what is pump and dump schemes. And pump and dump schemes is exactly what we saw during the deregulation of the 1980s of equity markets, where, this is what the Wolf of Wall Street is about. You buy an undervalued penny stock, you pump it up by trying to get a bunch of people to buy it, and then you dump and you exit at the top. And then all of the people that invested that you got to invest lose money and you walk away with lots of money. And that is essentially what happened to quite a few different celebrity-backed either tokens related to NFTs or actual cryptocurrencies that were being propped up. And some of them are now being sued. Kim Kardashian is being sued. Floyd Mayweather are being sued. And they're being sued based on the fact that they were essentially involved in pump and dump schemes, which are illegal. And guess what? People go to jail for those. So essentially promoting Ethereum Max, which is what Floyd Mayweather was promoting, it was a pump and dump scheme. But it is important to understand that even those currencies that may or may not, those cryptocurrencies that may have just always been set up to be essentially a Ponzi scheme, a last out is the loser kind of scheme, that meant that some of the other currencies that maybe had a bit more market value, Bitcoin being a great example, started to look like the safe investments in the crypto space. this is also combined with the fact that you had a lot of people that just had more time. We saw like a huge increase in day trading with like the GameStop, with, unsophisticated investors trying their hand at day trading. Um, and we saw the same thing within the crypto sphere. We also saw a lot of people that uh, have addictive personalities and may have been involved in doing gambling in person when that was a possibility, start to turn to crypto as a way to fulfill their gambling addictive personalities. So we've got like a combination of a ton of risk factors. Then we had an A-list celebrity. By the way, I was not claiming that Kim Kardashian is an A-list. Maybe she is. I don't know. But you know who is definitely an A-list celebrity? Matt Damon. And Matt Damon showed up on a Super Bowl ad for Crypto.com saying the fortune favors the bold. And that led this air of legitimacy to crypto that meant that we had a lot of people rush towards the market that didn't recognize how very, very unregulated it is. And guess when we have seen this in the past? Well, when did we see this in the past? In the 1920s, when essentially there was massive amounts of Ponzi schemes going on in the banking industry. The banking industry was functionally unregulated. And then guess what we passed? We passed the Glass-Steagall Act, otherwise known as the Banking Act of 1932 and 1933. The Glass-Steagall Act under Roosevelt was what led to the separation of investment banking from commercial banking. And it meant that when you put money into a demand deposit account at a regular bank in the United States, it is covered by the Federal Deposit Insurance Corporation. And having insurance on that money, and also it banned banks from providing interest on demand accounts and had reserve requirements for how much the banks had to actually keep on hand and not just lend out to other people. It separated a lot of the more risky investment bank moves, which there's so many more of them now than there was in 1933 as far as financial derivatives, because we have big computers to do math and make weird derivatives and stuff like that. We didn't have dark pools of money in 1933. We didn't have we certainly didn't have the massive volume of retail investments going through essentially three big block institutional investors that can move the market in huge ways. So all of this to say, we've been here before. And every time we've been here before with these unregulated markets, what happens? Regulation. Well, what has been going on as we've seen, currencies fall, as we've seen people lose their life savings in the crypto market? We've seen a lot of countries start to say, we're going to start regulating crypto. Some of that has to do with the fact that they just really want to get taxes off of it. And a lot of it has to do with the fact that they're concerned from a political standpoint about what these risky currencies, what these risky financial assets being available to an unsophisticated investor is. China actually cracked down on cryptocurrency last year on both the mining and the trading side, and on regulators in Hong Kong, which is, separate from China as far as financial regulation, although less and less so these days, was cracking down on it. Canada and the US have started to warn of regulatory actions. And as we talked about in the last live stream where I talked about the Tara Usd collapse, we are seeing certain state AGs actually file against different cryptocurrencies because they're saying essentially you are acting like a bank and you're not doing a very good job. And then Britain actually banned Binance, which is the world's largest cryptocurrency exchange. So there are a lot of ways in which we are starting to see the inklings of regulation. Guess what regulation scares? It scares a lot of the largest investors, because a lot of them were using it as a place to avoid taxes. As a place to do these pump and dump schemes where it's hard to find who's on the other side of a transaction, because there's not registration requirements. Like registered under the Investment Advisors Act of 1940. And I have, I am registered with the Securities and Exchange Commission. I'm registered with FINRA, which is a self-regulatory thing. I've had to pass an exam on my knowledge of the laws and ethical concerns. People that are involved in cryptocurrency exchanges are not required to do that, and there are far fewer regulatory frameworks for pursuing any kind of action against people that are involved in these sort of schemes. John says, we just saw Elon pulling a pump on Doge today as well. Yeah, I think there's kind of a lot of things. Kenneth says, I was watching Sad Crypto Bro Days videos all day yesterday, and they're still leaning on the same talking points. Crypto is like Amazon stock. Big banks and governments are causing the crash. Buy more, etc. Crypto, whether it's all a catastrophe, correct? That Newbold One says, as far as Matt Damon, oh dear, he was in that maths film. He must be good at maths. I don't know if people really think that math and crypto are related, but there are a lot of ways in which ways in which all of the rush towards cryptocurrency that we saw, different firms going towards, we saw a lot of legitimacy of it, like Fidelity push to allow people to be involved, to have some of their investment of their retirement portfolios in crypto. We've seen lots of hedge funds and 107C funds like push to have market positions in crypto. We've seen really big banks have positions in crypto. We've seen Wall Street embrace it, essentially. And because there isn't really value, like Bitcoin and crypto was pushed as a way to do everyday transactions. But in reality, the market shows that people are buying it to hold. Majority of people have had it for over a year. They're buying it as an investment. As Ken was saying, they're trying to say, oh, it's like Amazon stock that you buy and then you hold long term. Like more than half of people that hold Bitcoin have held it for over a year. It isn't really being used as a replacement for fiat currency. It is being used as an investment device. Companies had to figure out a way to make it useful and have value in the market in order to have people participate in it when it isn't being actively traded in a day-to-day sort of way, the same way that fiat currencies are. Well, what did they do? They created elaborate ways for people to buy cryptocurrency by borrowing money. And this all leads up to it. So we've got companies that are letting people use their Bitcoin as collateral. Companies are letting you borrow money and be heavily leveraged to be involved in the Bitcoin and the cryptocurrency market. This is all known as DeFi or decentralized finance. All of this leads up to this week. We saw Bitcoin drop below this $20,000 mark. Why is this $20,000 mark important? Well, analysis has shown, I believe Bloomberg was who did the analysis. Analysis has shown that about 50% of people have positions in Bitcoin where they stand to make a profit as long as it stays over $20,000. Additionally, $20,000 is the point at which a lot of people and firms that are huge investors in Bitcoin start to lose money and therefore have algorithms that will trigger them to start to sell in order to protect their profit. Bitcoin dropped below $20,000 this week. It's also important to note just how volatile Bitcoin is, despite being the kind of flagship and number one cryptocurrency in the world that people buy theoretically as more of a safe currency outside of the stable coins, which, as we know, not all are so stable. This issue, when it falls below $20,000, to show just how volatile it was. At its highest point last year, it was trading in the $60,000 range. So this is the fact that it's even like $20,000 is the watermark. It means that people were buying above that. half of people were buying above that, and therefore, are really rapidly losing money. And now we're seeing even more people, the people that had bought in before it was reaching those peaks of $60,000 are losing money. More than half are now losing money if it falls below $20,000. And that means a lot of people are going to be liquidating their positions. We saw crypto at one point, it was below $17,000. And that is really, really notable because there's an acceleration effect that essentially happens when you have large traders that have substantially leveraged positions in Bitcoin, meaning they borrowed a lot of money in order to get Bitcoin, have to sell it off in order to cut their losses, right? Because you see an acceleration effect when it's these large investors. So it's like really important to understand the effect of that. And we saw significant deregulation. Essentially, the Glass-Steagall Act was, by 1999, it was pretty much almost dismantled. I mean, we still have FDIC insurance. But the final pieces of it were really taken out in the Dodd-Frank Act that passed in 2010, which happened after the last Great Recession. It was meant to regulate investment banking more because the last crash we had, guess what? It was caused by banks doing risky shit. And guess what we've got again? Banks doing risky shit. It's just new risky shit. Also, some of it is the same. Did you know adjustable rate mortgages are back? Scary stuff. So anyway, all of this point to say, this is why you should care about Bitcoin falling below the mark, even if you're not invested in it. It's nice to have some schadenfreude at crypto bros that may have been yelling at you. But there are people that perceive this as a lot more stable than it really is. And it is, I like to think of crypto as a canary in the coal mine. It is a experience. It is a very volatile financial derivative that is unregulated or barely regulated. And when it falls, it is going to fall harder and faster than the markets as a whole. But seeing what is happening to it, it is important to understand the amount of exposure that a lot of the big firms have to cryptocurrency at this point. And when we do see them like liquidating their positions due to fall, when we see things like the largest crypto exchange turn and halt off trading, which happened this week as well. When we see things like that happening, what comes on the heels of that? Well, financial regulation. Financial regulation comes out of essentially every crash. We saw massive changes in financial regulation in the 1980s after all of the pump and dump schemes that were happening in penny stocks. We saw massive financial regulation after all of the risky positions and Ponzi schemes that we saw after the crash of 1929. That is why essentially everything that regulates what I can do as an investment advisor representative is entirely based on laws passed in the 1930s. The Investment Advisors Act of 1940 being one of the lightest ones, but the Securities Exchange Act of 1933. There are Securities Act of 1932. There are a lot of regulations that come out of these times of economic turbulation, and financial regulations, as much as we don't think that they have an effect on our lives, because whatever, it's just investment bankers. It does. It funnels out into a lot of things, and that's what we really saw in the 2008 crashes, which was, risky positions being taken by banks in mortgage-backed securities. We saw, this is a super safe asset, and people's pensions were overly invested in these mortgage-backed securities that were banks were bundling more and more subprime mortgages into them. They were lending out to people to buy houses that were not good lending risks. People were getting foreclosed on. Loans were getting called. People owed more on their houses than the houses were worth. And all of this kind of stuff that happens in the financial markets including the decentralized finance markets, it has an effect on our everyday lives. I think it's easy to get caught up in the stuff that we really see, which is unemployment and inflation are two things we really very much see. Maybe you're the kind of person that also looks at your retirement portfolio on a regular basis. And so you're like, oh, the stock market is down. I like to remind people the stock market is not the economy. However, when things are happening at large scales with financial institutions, we get into the too big to fail, the buyouts, and that does affect our everyday finances. I'd never introduced the donut, y'all. It's because I like to rant about crypto. And you know what? The good news, I don't see anybody in the chat that is going wild. I think it might be donut time. Okay, I've had this donut before. I'm sorry, I don't have a donut light today. I've had this one before. It is a strawberry rhubarb fritter. It's also like the size of my head almost. Anyway, it's massive. I think it's donut time. If you have any questions or you just have opinions on Bitcoin, because who doesn't at this point, put them in the chat while I eat this donut. And let's do donut time. All right, donut time, y'all. This is going to be a messy one, I think. It has actual strawberry, like not fake strawberry flavor, but actual strawberry. New World One says, I was wondering while it patiently waited in the background for you. Yep, it's pretty big. I have had this one before, but I can't remember when, so I couldn't go back and find out my donut rating. Did everybody hate my crypto rant? I've got to say the chat's really quiet. This is very sweet. I think this, the topping, by the way, does taste like real strawberry. I haven't gotten to the rhubarb pieces yet, though. Aaron says, it was a great crypto rant. That's why I was quiet. Great. Didn't hate it. I always learn something. That's good. I know that I get off fast when I talk about crypto. Very sweet is my type of donut. I usually like the ones that are like a little less sweet. This one's pretty good though, because it's a fritter, so it's got like, it's huge, and it's got a good ratio of fluff to actual strawberry. It has that nice little sour edge from the rhubarb though, so it's nice. It's not totally sweet. This is not an attractive thing to eat on camera, I gotta say. It's also really hard to pick up without getting my hands messy because the top is like entirely glazed. Gosh. I'm trying to figure out which donut I really... Yeah, like what is the best donut to do here? What's the best donut rating? I think I like it. It's really messy though. I think 4 out of 5, maybe 3.5 out of 5. I have to go back into the archives and see what I rated this last time. Yep. 3.5 out of 5, I think. New World One says, I really don't understand how much of it works. I mean, I think a lot of people that are invested in it don't understand much about how it works. I think it is less important to understand the internal mechanics, but it is important to recognize that part of the way that crypto has been sold and the way that it is propped up by the people that promote it is this idea that it is an incredibly complicated technology underlying it and that it's very secure. And in reality, there is it's a giant public record of every transaction. And there are a bunch of ways in which that isn't necessarily the safest thing. But additionally, it has really big environmental impacts because every time you make a trade, you've got to download the entire transaction history. Um, I think what is important to understand, though, is that there is a lot of emphasis on, oh, it's so secure, oh, it's so technically complicated, in order to make people feel better about it. But there are a lot of ways in which you shouldn't, when you are invested in something, one, you should feel confident understanding it, understanding at least most of it when you're investing in it, right? Like, I don't recommend that people buy individual stocks in companies they don't understand. If you are going to be doing individual, equities trading, if you're going to go buy stock of a company, you need to be able to read a balance sheet. You need to be able to make decisions looking at their financial statements about and their annual reports about whether or not they are a good investment. And if you can't do that, I don't recommend making investments in it. Sure. Is it incredibly important that you understand like the mechanics behind how Fidelity or Vanguard or whatever your market trader how they go in and make the actual trade? No, it's not crazy important. But I think that crypto has been held up as this super complicated instrument in order to give it more value to the average consumer. When in reality, I think there's a lot of financial concepts that are easy to understand, and they are easy to understand because they fundamentally are quite a bit less risky. There's also a lot of people that truly believed that there was insurance, like a demand deposit bank account, like your checking bank account or your current account if you're not in the US. There were a lot of people that believed that their accounts were insured when they were on crypto.com or, Coinbase or wherever their crypto wallet was, and did not realize that they didn't have deposit insurance on it because it is a risky asset. Kenneth says, I think it's a good point to remember crypto isn't isolated and look at how folks are generally backing away from riskier investments like speculation. Investors are nervous. Everybody's so nervous about everything. Everything's nervous. I mean, it is like wild how nervous we all are. So yeah. Kenneth says, I'm wondering if we're looking at a market correction that is as low as pre-pandemic prices, at least in crypto anyway. That's an interesting concept. I think for certain currencies, we're going to see, yes, absolutely. I mean, there were a lot of currencies invented during the pandemic. So I think we're going to see market corrections on a lot of the newer ones. I think it's possible within crypto we'll see market corrections to pre-pandemic prices, but I think some of them are going to continue to have, I think they might have like a higher base for a while, simply because there's more people there. And it is, I'm trying to phrase this in a way where I can be really clear about what I mean, but we are looking at a lot of market corrections that will likely be lower than immediate pre-recession prices in a lot of markets. And that's because inflation is really high, and inflation affects a lot of other asset classes other than just cash. And riskier investments move greater than the market as a whole, and we are seeing greater than the average market as a whole. And crypto is one of the most risky investments. But I think the real risk to crypto isn't just loss of initial value, loss of investor value. I think the real risk to crypto is regulation. And investors went towards it because it was a way to avoid regulation. Like, Switzerland at this point, I think like 20% of Switzerland's financial banking economy is in cryptocurrency. Switzerland has long been where people have accounts in order to avoid regulation, avoid taxes, as the Panama Papers have shown us. And I think that we are more than likely see regulation to have a more shocking effect on the cryptocurrency economy than just corrections as a whole. That's my thought. John says the best analogy I've seen for crypto is triple entry bookkeeping. There's the double entry ledger and another, and then a public entry that can't be falsified because it's signed with crypto. That's actually a really good explanation of it. I think once you get into some more complicated things, you have to recognize that a lot of cryptocurrencies will have forks and essentially will have two different long ledgers going. There isn't always the same record happening for currencies, because essentially at some point you can have a disagreement about what's in the ledger, and then there's two different ledgers that people go off of. So there's a lot of ways in which, it's just like double entry bookkeeping. There is a lot of ways in which it can fall apart. But yeah, that's actually a really good explanation of it. All right, I should try to finish this, but it is very messy to you on camera. Anybody have any other? We can also talk about what happened in fiat currency this week if you want. So inflation be bad, as we talked about last week. 8.6% year over year increase. Numbers came out Friday. What is very interesting is as of Tuesday, the Federal Reserve was and has been broadcasting for months that they were going to do a 50-point percentage hike, which means 0.5% increase on the interest rate that they charge to banks to borrow money. They had been broadcasting that. The big thing is that the Federal Reserve, they don't want to yank up their interest rates too soon, because while that would help put a lid on inflation, because it slows down the circulation of money in the economy, which is largely why we have inflation. We have too much money in the economy, among other things. You slow down money in the economy because the more it costs to borrow money, the less people are borrowing money, including banks. But if they do it too hard, bad things happen in the economy. And what people keep referring to this is as a hard landing. What the Fed is trying to do is a soft landing, which means that, yes, there will be some economic stress and pain felt. That's part of the business cycle. But with this high of inflation, we can't not raise rates, unless you want to be Turkey and then have hyperinflation, like they're going for, by refusing to raise rates. But you don't want to raise them too fast, because the faster you raise them, the harder the landing. They've been aiming for a soft landing. Hindsight is 2020, and a lot of people believe that it took them too long to raise rates. And now a lot of predictions are saying the chances that we have a hard landing are like 80% or something like that. I mean, whatever. Economists can't really tell anything until after it happens, because it's a bullshit discipline I'm involved in. But it's really a discipline of pretending to predict forward while actually looking back. But essentially, they decided to raise it 75 percentage points. So, or a 3/4 percentage hike, which means that 0.75, which I know doesn't sound like that much more, but it was surprising to a lot of people. Some pundits were coming out and saying that they should do 100 basis points, which would be a whole 1% hike on the interest rate. I guess they decided to go somewhere in the middle. The 0.5 that they'd essentially been hinting that they were going to do for a long time, they saw those inflation numbers come out, and they also got this release. So that inflation number from last Friday was the highest inflation we've seen since 1981, when we were really stuck in this stagflation. We had very high inflation in the early 1980s, largely because of the savings and loan crisis related to that deregulation that I just mentioned. It's all connected, y'all. Anyway, that came out, and then we also had a consumer sentiment report come out. And consumer sentiment is important because in economics, we call this the animal spirits, which is essentially just like how people feel influences the market a lot. And people feel real pessimistic right now. And it's not really a surprise that people feel really pessimistic, because every time you go to the grocery store, it costs like $40 more to fill up your cart with the same amount of groceries as it did the previous week. When you go to the gas station and you try to fill up your car, you get less gas for more money. We're looking at, we've crossed the average gallon of gas in the United States now is over $5 a gallon. Fuel prices influence a bunch of other things. Like, we all see things in our own local economy that look bad. It says, most people think we are headed for a recession now. It's like 9 out of 10 CFOs or something are predicting a recession by 2024. The thing about recession is it's actually a backwards. The technical definition of recession is actually backwards, so it's 2 quarters in a row of negative GDP growth. And I think that there is a very strong possibility that we're looking at a recession, as I talked about last week. And I think a lot of people are feeling that way in their life. They're seeing, businesses full less. They're choosing to cut back on spending in certain areas. People can't afford plane tickets, so all those trips we thought we were going to take when COVID was over, which it isn't, but we all kind of have decided that maybe we want it to be over, and we're just going to act like it. Those trips are now too expensive to go because people have been stuck waiting, dealing with like huge delays in airports. And if they're not stuck waiting, they're paying through the nose. So consumer sentiment isn't good. The Fed saw that. That influences a lot of different feelings. And I think they were like, we have to get inflation down. This is really affecting consumer sentiment, and yanked it up. On the fiscal policy side, not the monetary policy side. So the Fed is monetary policy and fiscal policy is set by the president and Congress. On the fiscal policy side, Biden aides have been looking at different ways to deal with gas prices. There had been some leaks that maybe they were looking at getting people rebate cards for buying gas in order to like try to lower pain at the pump. The normal way that you would do this would in the United States with our incredibly complicated tax system that they would be doing it as a tax rebate, but tax rebates don't change people's behavior now. Also, they're not necessarily good for the midterms because people like it when you give them money ahead of when they vote, rather than when you promise that when they pay money with their taxes, they might get some money off of it. So they were talking about doing like actually sending out gas rebate cards to Americans, but there's a chip shortage, so that's not going to happen. They don't have a lot of really clear like information. They also looked at invoking the Defense Production Act, which essentially lets us during war kind of suspend certain parts of regulation, force manufacturers to do different things. The big thing that they would be using the Defense Production Act for would be moving diesel between ports, as far as I understand. I don't know a lot about fuel supply chains, so I would have to do a lot more research if you wanted me to talk in depth about that. But the real thing to understand is, while there's leaks and they're kind of trying to broadcast that they're doing something about gas prices, there's been nothing concrete to come out. And there's a lot of thought that maybe there's not really a reality that they're going to be able to do it. So, yeah. All right, y'all. That might be all on the economy, unless anybody has some questions. But we do have an exciting notice. Which is, so if you don't know, on the Oh My Dollar forums, we do different challenges throughout the year. We do Budgetober, we do savings challenges. So for the 3rd year in a row, we've been doing year-long savings challenges. So it started with 20 in 2020, and then it was 21 in 2021, and now it is 22 in 2022. And there's different challenges based on what kind of savings that you can do, what your income is. But one of the challenges is to save $20,000 and $220. And Candy Girl on the forums already met their goal for the week. So they've saved $27,250 Canadian this year already as of June 1st. They're actually aiming for $43,450 USD, which would essentially be for both household members. But huge congratulations to Candy Girl, who will be getting a sticker in the mail and already got a badge on the forums. It isn't too late to join the 22 in 2022 savings challenges. If you are focused on paying off debt also counts towards your savings. So if you're interested, there are the big bold one of saving $20,000 and $222. And then there's also 22% of your income, or $22 a week, $22 a month, depending on what works for you. We also have the bingo challenge on the forums, which you essentially set your own financial goals for. But anyway, congrats, Candy Girl. We need to get like the child sound effect of wee, the yay sound effect that was in Final Cut for years that everybody uses. Kenna says, why didn't Turkey raise interest rates? Because their president is thinks that raising interest rates is bad and has no grip on economic reality, and everybody keeps telling him to raise interest rates. And then every time an economic minister tells him he needs to raise interest rates, instead he fires them. And so Turkey is dealing with really massive inflation, like 14% month over month inflation right now, because they absolutely refuse to raise rates. And guess what happens? Inflation. So yeah. Whoa, yeah. Zimbabwe is also, who, if you don't know, was dealing with massive hyperinflation. They essentially got rid of their currency, kind of switched to like a semi-local currency that was pegged to a more stable currency. And corruption has meant that Zimbabwe is now, once again, only like 2 years after getting out of hyperinflation, 3 years, looking at a pretty inflationary environment again, because of corruption, pretty much. So yeah, we've got some parts of the world that are really dealing with really serious risks of hyperinflation. The United States, even though it is really high inflation, no discounts to that, we are not anywhere close to hyperinflation. Hyperinflation is what happens when you have a currency that you are essentially don't have good regulatory procedures in place. We've never had hyperinflation in the US dollar. That doesn't mean it can't happen at some point. A lot of hyperinflation in history has happened because of kind of a lack of fundamental understanding of economics. Sometimes it can happen from supply chain crises. It happened in the Weimar Republic in the interwar period in Germany because of essentially you had to pay a bunch of reparations. Germany had to pay a bunch of reparations back to other countries in Europe in the interwar period for World War I. And the way that they dealt with that was just by printing a bunch of money. And then then they had massive hyperinflation. So there's a lot of worries about hyperinflation, but the worries are way overdrawn for the United States dollar simply because it is a world reserve currency. We're not at huge risk of anytime soon it stopping being a world reserve currency. And so don't be too worried about that, but inflation is real. You don't have to be carting your money to the supermarket in a wheelbarrow like you would be in hyperinflation. You don't need to be cashing your paychecks and then running to the store to buy stuff before the prices go up in 2 hours in order to be affected by inflation. So yeah, don't get too scared by hyperinflation if you're in US dollars or euros or Chinese yen. Just be Great British Pound. I don't know. You got a lot of things going. I should do a whole live stream on what's going on in Britain's economy because it's a mess. It just makes me feel bad. It's like I feel fundamentally bad every time I look at what's happening in Britain right now with Britain's economy. So, yeah, it's worth not just Britain, United Kingdom's economy really be worth talking about that. That would be a good live stream topic. So, New Bold One says, yeah, it's a mess. I know. I also will say that, like, not to downplay what's going on in the UK because it is quite a mess, politically. But I gotta say, like, the media coverage that I follow from the UK is seemingly, like, it seems like there is a lot of media discussions about all of the lockdown parties and the lying and the no confidence vote and everything. And the, it's contrasted with the coverage of the January 6th hearings in the United States. And it is hard for me to be like, oh, the most important thing is they broke COVID lockdowns to have some parties, when the alternate is actual like sedition hearings in the United States where the president was trying to like overthrow free and fair elections and people died. And that isn't in any way to discount the fact that like terrible things happened. Britain has been hit really, really hard by the economy. England has been hit really hard by COVID. Brexit economy has been really crap. But like, wow. Fuzzbubble says, I'd be interested in a live stream about the Great British economy. Yeah, I will do that. It sounds very fun for me. Aaron says, I made you a yay button. You should try it out. Okay, well, let me try to find where it is. What page is it on, Aaron? Oh, I found it. Okay. All right. Candy Girl saved. Hit the goal for 22 in 2022 challenge. Did it work? I hit the yay button, but I don't think it did anything. Oh, it's really quiet. Okay. I hit it a few more times. Oh, we hear it. Okay, is that too many yays, y'all? Okay, I'll stop now. All right, y'all. It might be it. We've been streaming for about an hour. I will say I've noticed the streams are faster when we start them at 11:30 in the morning. I think the 2-hour long streams we were doing really were because it was like evening and I felt like there was no possibility of me doing anything after that. But guess what? I got stuff to do today. So I guess that's how it's gonna go. We're gonna have shorter streams now. Next week's live stream is at the same time. I believe the week after that, I'm gonna be in New Zealand for the stream. Maybe it's the week after that. So we will see. I think I'm gonna have to stream at like 5:30 local time, but I think I'll keep it up anyway. Y'all, thank you so much for joining the stream today. I know we're still adjusting to the new live stream time. I think it's good. I think it's good. I think I'm glad that we're doing it at this time, but stuff and things is important. I will say I really do feel like I've gotten my afternoons back since I moved to this earlier live stream time. I also appreciate that like I actually have more listeners in Europe than I do in Australia and Asia. So maybe it's fine. I think the downside is a lot of people in North America kind of did this as like an evening Sunday activity, and I feel like maybe it's harder to do in the middle of the afternoon in North America. So I don't know, it's hard, but hopefully y'all can tune in afterwards if you can't make it live. Thank you all for joining. I hope you stay safe, stay happy. If you do want to get notified about live stream times, you should join the text crew. It seems to be working in the UK and for Canadian phone numbers. So give it a try. Textcrew.ohmydollar.com. Essentially, I just send you SMSs out because you can't rely on YouTube notifications. You can't even really rely on Patreon notifications, even if you are a member of the Personal Finance Society. I try to send them out on there, but and if you are a member of the Personal Finance Society, you can be part of our Discord, which does give pretty reliable notifications that I'm live, but otherwise, join the text crew. Stay safe, stay hydrated, pet a cat if you have one available, and I will see you all next week. Cheers. Bye.